And turning now to fresh and hot earnings from the food industry. Shake Shack doubling down on its play for the high end. The quick service restaurant saying in its earnings call that it wants to aim for the luxury consumer, even as fears of tightening spending continue to grow. Here with more, Yahoo Finance's Brooke DiPalma. So Brooke, the luxury consumer at Shake Shack.
The luxury consumer apparently spending a lot of money at Shake Shack, and investors seem to be maybe another food company, but loving it. I mean, shares this morning were up more than 15% after Shake Shack reported its quarterly earnings results. And if you take a closer look, similar to what we're seeing across the fast food industry, same-store sales continue to increase for restaurant chains. As you can see right here, higher than Wall Street estimates, up 10.3%. That's higher than nearly 9% like Wall Street had anticipated. And what really is driving that is consumers looking to get out, looking to spend, and even some trade down that we're seeing of consumers coming to Shake Shack to get more bang for their buck, perhaps, as they remain pinched in this inflationary environment. But taking a closer look at some highlights that we heard in the call. Unfortunately for Shake Shack, higher costs still do persist when it comes to the cost of beef. They expect that to rise mid to high single digit. Also something that we haven't really heard a lot yet, but fries expected to cost about 20% more compared to last year. In addition to that, they're also seeing paper costs and food costs. They were 29.4% of Shake Shack sales this past quarter. But consumers going back to those pre-COVID behaviors. They're going to more Shake Shacks, they're dining in person, and they're even using kiosks more, which Shake Shack is investing heavily in. And those tend to help boost sales for Shake Shack. I guess too many consumers don't really want to say, hey, I'll actually get that extra milkshake. But if it's on the kiosk, they have no problem saying that. But they're also saying that that in-person dining trend is helping packaging costs a little bit there. And as Inez mentioned at the top of this, that healthier behavior among high-income consumers. Foot traffic certainly also got a boost, and what they said was the limited time white truffle promotion. Now that also was a higher cost. That was $8.99, and it saw high income consumers trade into the category. Here's what the CFO had to say about that on the call.
We over-indexed to higher income consumers. We were really encouraged by that 4.8% traffic we generated in the first quarter. And, you know, we have to just really kind of talk about white truffle was the most expensive LTO that we've ever launched. We're kind of that attainable luxury. We're definitely gaining share at the high end. And, you know, we hope that that continues.
And for their fiscal year guidance, they do still expect same Shack sales, as they call it, their same store sales essentially, to increase low single digits to mid single digits. But they did emphasize that they are weary and they understand that macroeconomic risks that may further impact the restaurant sector and those upcoming results, just to be mindful of how that consumer might change, how their spending habits might change, and more oncoming challenges that might face the consumer in the coming year. So certainly an optimistic take from Shake Shack here, and even from Wall Street we're seeing as well.
Yeah, I know those shroom burgers, you can't really beat those, although they are costing close to $9. So.
Right. Now they just added more to their vegetarian menu as well. So certainly looking to engage more customers too.
Yeah. Now the company is looking at expansion plans and also drive-thrus. Talk to us about that.
Yeah, well, Shake Shack, I feel like, is largely known as sort of a New York metro-based restaurant chain, that roadside burger chain. But they have big plans for international operations as well as license operation. They said that the license openings, they plan 30 to 35 in 2023, domestically approximately 40, and they're heavily committing to drive-through. They weren't able to share too much about what sort of consumer behavior that they see in drive-through, but they did say that it was a big opportunity for them. They're set to add another 15 and more than double the size of their drive-through template this year. And so there's lots of opportunity for the company to learn about the behaviors that they expect when it comes to drive-through. But the past quarter, they opened 13, 6 operated, 1 drive-through, and 7 operated by licensed partners. And so certainly a big learning opportunity in terms of just sort of international growth and how you could see this New York-based chain sort of make it global.
Yeah, I mean, and also even in the suburbs, I mean, that's where I live in. I'll tell you that it would save having to park the car, go in, pick up the package. Drive-through would be much easier. Thanks so much, Brooke DiPalma.